How you guys doing?
Doing well. And
Good,
Eric?
good. Very well, thank you. So I think I have an opportunity to have a conversation with two amazing people that are friends and colleagues that I know from business, and happy to share that with you guys. I'm Chris McGuino. I'm one of the founders of DNA, and I will let Sophia and Patrick introduce themselves so that you guys can get a sense of who they are and what they do.
Thanks, Chris. I'm Sophia. I work on the investment team at ATW Partners. We're a fund based in New York, managing about $1 billion in AUM. We are both private and public investors, and we've been very active in the digital asset treasury space over the past 7 to 8 months now. So thank you for having me.
Thank you. My name is Patrick Sang. I'm the chairman of Sang Group. We're a fourth generation single family office in more traditional finance, but we're quite heavy into crypto since 2015. We're close friends with BNA and looking forward to do more in the next 4 years during the Trump administration. I keep repeating this. I'm moving to New York later this year and can't say more than to encourage everyone to get more involved in digital assets or just tech in general. So stocks, crypto is just very bullish the next 3.5 years.
Great. The team at ATW, there were Sophia works and is a key part of the team. As they've invested in me for the last, I think it's like 20 years, which is weird. Sounds like a really long time because I haven't really been alive for 20 years. I'm like, sort of. But I appreciate them, and I appreciate Carrie and the entire team at ATW, and now Yusuf here. I know that you're seeing a lot of deals now come across on the DAT side. Everything is all the craze about DATs this season of 2049, and I don't think there's one that you haven't seen, right? There's probably not one that you haven't seen.
There's a handful, but I think we've seen almost all of them.
And how many of you invested it?
We have about somewhere between 20 to 30 in our portfolio. And that's just on the equity side. We have a range of other types of exposure and more structured transactions in public companies that own crypto. I think there's a wide spectrum of companies in that you could consider a DAT, but we're seeing more and more companies at least own a little bit of crypto, maybe not a full DAT definition, but we just see a lot of companies that aren't focused solely on accumulation, interested in having some exposure on their balance sheets.
That's amazing, right? 20 of these things are invested. And I remember I was sitting in the office with our boss, and I said, Carrie, you have to check out this crypto stuff. It's amazing. We could create converts around crypto, and you guys could make a ton of money. And then next thing you know, they're invested in 20 of them. And so they've done a great job doing that. And so congratulations. That's amazing. And I'm just taking credit for all of your work is basically what I'm doing. Patrick, how about on your side? What are you guys working on the DAT side, and what are you seeing happening from your family office?
I think on the DAT side is quite interesting. It's kind of like a new trend and kind of asset class. I think we'd be waiting for a long time to turn traditional finance into crypto now. And now I think the next thing that I'm looking at more is how does it really go border this from different countries, where I think the main thing would be regulation. And once that is a bit more mature, then I think things will then turn into more against traditional finance as well. So we're still kind of learning. Obviously, we need to learn a lot from Sophia and the teams because they've done so many. We're still kind of learning, but we're also creating, hopefully, with DNA, some new projects in this space. So watch this space.
All right. So, Sophia, what for the investors here, what are the things that they need to look for in the deals that are coming their way? What is it that you're focused on when you see a DAT deal come to your desk, which happens every single day? And what do they need to watch out for? And what are the most important things for you?
Yeah, definitely. I think there's three key things I would look at. One is the asset itself. Do you believe in the project? Do you see the growth potential in the underlying token and what people are doing with the token? Second is structure. So for our investments, there's now a pretty set playbook of how these dots are coming together, at least in the initial raise. So we look very closely and see whether or not the initial large pipe raise typically looks like. Um, and for investors who are looking at the company after it becomes a DAT, looking at the types of other structures and additional capital raises that they're doing, whether it's additional equity raising through their ATM facilities or converts and other types of leverage and debt that they're taking out to try to grow the treasury even more and drive the accumulation flywheel. And then third is the management team. Do you believe in not only their ability to actively manage the portfolio, but I think equally as important, do you believe in their ability to communicate the story and the profile of the data itself? As important as actually managing and getting yields on the asset, it's very, very crucial that you have somebody who's out there promoting the data itself, and promoting, hopefully, the token and the ecosystem in general.
So out of all the ones that you guys have invested in, out of the ones that haven't worked, the ones that, I mean, they're never not done until you sell them, so I guess they're still pretty good. But out of the ones that may seem like they're, haven't worked as well as the others, what is the quality that those have? Because that you just gave us what you look for as the people that you want to invest in, right? But what is the thing that's making the ones that are going down? Is there anything in common that they have?
That's a good question. So I think they're for the ones that are successful, I think they do an exceptional job in communicating the story and marketing and just constantly promoting the DAT and the token. But you have sometimes multiple DATs with the same underlying asset that have varying degrees of success, and the differentiation between those might be in its structure, might be in its team and leadership, and just their ability to execute on driving that so-called accumulation flywheel. But I think out of the ones that are not performing so well, I think there's a wide range of different reasons why they could be underperforming. But I think the common thread for the ones that are very successful is the marketing and the press and the amount of attention that they're drawing to the data itself.
So it's a diplomatic answer. So, Patrick, on the family office side, what, when you guys are, you like to be an operator, right? Like you like to get involved in things and put your hands into it. Or explain a little bit more about your approach to your investing.
Typically, actually, I'm not that involved. I like getting involved in the narrative, the strategy, how you get, the company to exit by public usually. So I do kind of get involved on a story part of the storytelling and how the communications part, and that's kind of like what I'm good at. In terms of actual management operations, that's not really what I do. But I guess you kind of like rely heavily on the management team. And just to add to what Sophia said, I would also say that in crypto and in that specifically, the things are changing so much so fast. I think one thing about the management team that I would stress is the ability to pivot and to adapt when needed. Because when it's a bear or a bullish market, then the skill set and the strategy is very different.
What do you guys see that, I mean, now it's moving fast. The trade is kind of like, cooled down a little bit. It was hot and heavy at first. You probably made a lot of money. We talked about it the other day. It was like a lot of money at first, and then all of a sudden it got a lot more challenging. And how pickier are you guys being in the amount that you're deploying, maybe the size that you're deploying, and how often you're deploying?
Yeah, we are a lot pickier now, I think. Now that market conditions have changed a little bit, it's been getting harder and harder for these companies or these projects to raise debts in general. So, and also the pop and the stock performance is not as easy to achieve as it was before, just because there's been so many, I think over 200 in the past few months. So yes, in general, especially on the equity side, things are slowing down for us a little bit. But I think there's still a lot of opportunity in other types of capital raising and instruments that these companies are employing to grow their treasuries, which is also slightly more interesting than just selling a bunch of equity to raise capital.
That's your specialty. So you actually like it slowing down, right? Because all of a sudden it goes from equity to equity and warrants, and equity and warrants go to debt, convert warrants. So it's actually perfect for you guys.
Yeah, traditionally we have been more structured investors, so it's been getting interesting now that a lot of these companies have a very strong balance sheet with depending on how much they raise initially for their digital asset treasury. I think companies do have to be careful of how they're structuring their capital structure. So I think that as time goes on, the digital asset treasuries are going to start looking different from each other, even though they have the same underlying asset, depending on what types of financing instruments they're using, what types of risk they're employing to manage their portfolios. And investors should be looking closely and understanding the differences between, the 5 or 10 or 20 ETH or SOL or whatever that are coming to market.
What do you think about the structures? Like the up until now, it's just been like these, failed public companies that are, treading water on NASDAQ and just kind of hanging on for, if it wasn't for this trade, a lot of them would already be delisted. They'd be gone, right? Or well on their way of doing some massive reverse and then some other structured financing deal to keep them alive that would just bring them back down again. So what do you think happens next? Because that was the trade that was happening earlier this year. What do you envision is the next iteration of this? What is the structure of the company? Not the structure of the financing. What's the structure of the company?
Is there a question about what the structure of the companies, the debts that have gone public?
Going forward, if somebody's going to create a new DAT, instead, like, do you envision, shareholder vote kind of action, something where it's a new direct listing or something where there's a massive change of control in the company? Where do you see that before they even get to you, the structure that they're putting on the plate?
Yeah, I think the structure of how it's been happening now, people will try to keep doing. And there's been a lot of talk about increased regulatory scrutiny on these types of raises that have been very active in the past few months. So depending on what comes out of that, whether they say it's okay or not okay, things could change in the way that these deals have been getting structured. It might get more difficult if they decide to tighten the regulations for the next iteration or wave of these digital asset treasuries. But if they don't care so much, you could keep doing it that way. Some companies and projects now prefer to have a cleaner, less baggage with shelves, so they'll pursue something that's more of a SPAC or direct listing of an existing company. So those transactions, I think, will still happen and potentially be more popular if they have an existing business that they want to raise in conjunction with the debt. But I think the current structure, just because it's pretty straightforward, it's been done many times, people know what to expect. that is the blueprint of how people will attempt to keep doing it for as long as they can.
Interesting. And Patrick, on your side, you said you want to see the crossover between the different markets. Like, what structure do you think goes in place to cross these things, or across the world? What could be done, and how can that be structured?
I think for debts, for example, family offices, you have potentially emerging markets, and different kinds of investors, including other governments. What needs to happen is there needs to be a kind of like new standard that different kinds of entities, whether it's government or corporate entities or even individual investors, will have to accept and recognize. And that's when it's recognized and accepted as value, so that, from a transparency or security standpoint, that once that is done, then they will flow well. But I think this is going to still take a bit of time, because even from the US standpoint, it's kind of like a SPACs, where it's a trend now. Everyone's doing SPACs, and then it crashes a bit, it comes back. And I think that's going to go through that kind of cycle as well.
But does that cross over into, like, do you think that these DATs will try to cross list into the same DATs will cross into other markets, or are you envisioning just completely different iterations?
I think it'll be a combo of both. I think initially it'll be the existing DATs going overseas to Asia specifically, and then in Asia they'll come their kind of version of DATs, and then there'll be some kind of like hybrid model as well.
Interesting. And then on the yield side that you're seeing when you're analyzing these deals, what's the return that you guys are comfortable with on the yield side out of the DAT that makes you say this is acceptable?
I think benchmarking against what you could typically get from, as an individual holder staking it yourself, I think that's a good benchmark, because as a treasury manager, your goal is to preserve the treasury to some extent. So I don't think we would want to have too much exposure to a treasury that's saying that they're going to take out, do run strategies that are really high up on the risk curve. So I don't, it depends on the asset, I guess is my answer, is depending on what you would get typically from just staking, and then what you could generate from, options trading or derivatives, maybe having a diversified portfolio with some allocation to the riskier strategies, but the core of it being a relatively safe and relatively, straightforward strategy is better than doing something really really complicated.
So 6% to 15% approximately, or lower, which is like 4 or 5%.
I think what you said, 6 to 15, is great. But if it's something where we see that they have the ability to get returns in other ways, we also like that. So maybe they have not just yields from the underlying, but some ancillary business that can add another revenue stream. I think those things, you have to view it holistically and determine, if this is a company that has a very safe or less risky treasury strategy, but in conjunction with something else, maybe it all balances out. I don't think we typically have a required yield, but higher than what you would typically get in like a very passively managed treasury or portfolio is the goal.
You guys want to hear like a little bit of a story from the trenches? You ever want to hear that? Okay. I'm going to tell a story about. So we were working on this deal, and I think we raised like $50 or $60 million for the transaction. But that wasn't enough for the deal, because it had to have $100 million in the transaction. So Sophia and her partners jumped in, and they they were going to put $50 million into the transaction, and which we thought was fantastic. And we got excited about that. We had to go back and tell all the people that already gave us the other 60 million that they were going to give us 50 million, but because their money's a little bit different than everybody else's, it's their money's worth a little bit more money than everybody else's money. So we had to go tell everybody that their money was going to come into the deal. And then we were like wrangling cats, and we finally got the, most of the people with the 60 million in, and then we got Sophia and her partners were going to put 50 million into the deal, and we were going to close the deal that day. And the stock went from $1.50 to $9 in one day. And it took the MNAV from like 1.1, what is it, 1.1 or something like that? Which is high now, actually, when you think back on it. Like, it was like, if you wouldn't even do like 1.1 anymore, right?
Never say never.
Okay, so I mean, like the for POAI we just did, it was like 0.77. So it's, the MNAVs are getting lower and getting consolidated. But this was a very liquid trading token, so it had the ability to be a higher MNAV. So anyway, the stock runs to $9. The public company sells like millions of shares off their ATM and kills the deal. And now, the stock goes back from $9 to $1.50, but we can't do the deal anymore because now there's another 10 million shares in the company. And the public company did great. They got all their debt paid off and they got the whole thing taken care of. But like, Sophia and I wasted around 3 weeks of our time for putting the whole transaction together that got blown up in one single day. So that's the kind of stuff that happens in these DATs. And that's why I think that the structure of the pipe transaction into an existing deal is dangerous. There's too much opportunity for people to leak the company on purpose because it's in the best interest of the public company to leak the story so that the stock goes up, so that even if the deal doesn't work out, they can still do something in the market to make their money, right? So I think there has to be another structure out there that is better than trying to keep what is impossible to keep hush-hush. Because with so many people working on these things, you got, when you look at who's working on this thing, you got 5 lawyers, you got you got lawyers on both sides, you got bankers that are engaged, you got the public company, you got the sponsors, you got the investment people that are investing. So now you've talked to probably around 100 people. You try to keep the name of the public company as quiet as possible, but at the end of the day, it's virtually impossible, and then it just skyrockets, right? So if you guys have any ideas, I'm all ears for how to solve this. I actually have an idea about how to solve it. I think you take a different approach. These things need to be not, they need to be not in a pipe transaction into an existing public company. I think they need to be more like a direct listing where you take the time to get it done. There's no rush on your side from me saying, hey, Sophia, it's Wednesday. I need an answer by Friday. I mean, although that's good because it gets you guys to make a decision relatively quickly, but in the long run, it gives you more time to analyze it, which I'm sure you appreciate being able to analyze it a little longer, right? So I think the market is going to change to that. Would you appreciate that? Or would that be, do you think that changes the whole dynamic of the trade?
That would be interesting. I think we would probably want to see how one of these types of structures performs. I think, a direct listing has several benefits. But the benefit of doing it with a public company or an existing public company is there's already eyeballs on the company. So a direct listing perhaps would be more challenging to get that initial splash. Or it could just be that people really appreciate that it's clean. There's no skeletons in the closet, which many of these companies that are doing these pipes do have. an existing money losing legacy business or other issues that keep cropping up, which is very common in that side of the market. But yeah, a direct listing also takes time. There's listing requirements that you have to meet. There's like a whole checklist. So in some ways, doing the pipe raise is straightforward because at least you know whether or not pretty quickly it's possible. Like you said, we worked 3 weeks on trying to structure a transaction, which is actually still pretty quick in like the grander scheme of these things. A direct listing would probably take longer. But I would be very interested to see how the market reacts to something like that. Something that's perhaps in between the timeline of a SPAC or a pipe and something that is less expensive than a SPAC, but still comes out with a clean company.
All right. Well, I have some ideas, so we'll be knocking on the door. All right. So last question for you guys. What do you think happens this year? Where do you here we are at 2049. We're let's say not even this year. Let's say March when we're sitting at 2049 in Dubai again. What do you think? What do you think the market looks like, and what do you think has happened between there and here? And we're going to videotape and play back at the event.
I think from a DAT perspective, I think there'll be more DATs coming out. I think be less. I think be more difficult to raise the money. It'll be more difficult to get the right valuations, and there'll be a bit of a correction. In terms of the crypto market, I think it will continue to be quite bullish, but there might be a few ups and downs before that, maybe end of the year. But I'm still quite bullish on crypto and stock markets in general in the States.
Yeah, I think you are still going to see more DATs, perhaps not at the same pace that they've been coming out over the past few months. Perhaps more altcoins further down the market cap list. I do think that a lot of the existing DATs that have launched, you're going to see more underperformers, perhaps more that are trading below NAV or at a discount to NAV. And I think that you're going to see more companies thinking about how to differentiate themselves in other ways. So it might be starting or incubating an operating business that adds revenue in a more diversified manner beyond just capital raising. And also maybe perhaps more consolidation in the DAT space.
What's the last one that you invested in?
Yours.
What's the symbol of that?
POAI.
POAI. That's great. Everybody else should invest. Sophia's really smart. So you guys should invest in POAI as well. She thought it was a good investment. I think it's a good investment. Thank you very much, guys. Appreciate it.